And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Emily Graffeo, taking you through to that closing bell. It's a global simulcast. Tim Stenovec joins us alongside Norah, Mulinda. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. Fractional gains on the day for the major U.S. indices. Tim Stenovec with yields down, oil down as well. The dollar flat on the day.
Yeah, I'm glad you went to oil. That's exactly where I'm looking. We see Brent down about 5% right now, 4.5% lower for WTI. But we were just talking about gas prices. I mean, it's still high relative to where they were just a few months ago. I mean, you still have these benchmarks up more than 40% this year. And the AAA gas price average up to 410 right now, or close to 410. So that's something that folks are watching closely ahead of these midterms.
Yeah, another thing that they're watching closely is that AI trade, with a lot of folks looking ahead to Nvidia earnings. Tim and I earlier in the show on Business Week just talking about the fact that this used to be a market Super Bowl, still a very consequential earnings report. But, you know, when you see a little bit less concentration, you start to see investors looking in other places as well. But if you take a look at the SOX index as we're heading into the closing bell,
Super
SOX
Bowl.
up
Remember
about
when
1.4%.
like Joe Weisenthal had like didn't they have like a watch party somewhere at some bar in New York?
Some like
I believe it.
Yeah,
it was a different
times.
time. It was a different time,
Tell my
Romaine.
grandkids about that.
Now there are a lot of ways you can look at the AI trade, right?
Absolutely.
Yeah, sure.
I'm always here working. I'm not partying.
We should point out we are going to get some earnings from the software side out of Intuit and Zoom. Box also set to report, obviously a little bit less consequential than Nvidia, but we'll bring you those numbers as soon as we get them. Meanwhile, the numbers for the broader market, mostly in the green on the day. The Dow Jones Industrial Average, the S&P 500, each up about 0.3% on the day. The Nasdaq Composite and the Nasdaq 100 each up about 0.6% on the day. And the Russell 2000 getting in on the action on the day, up about 15 points, or about 0.5%. We are getting a few earnings out right now. Intuit actually crossing the wire right now. Net revenue in its most recent fiscal quarter coming in at about $4.35 billion. That does appear to be a beat based on the average of estimates collected by Bloomberg. But here's your forecast going forward. The company says that for the full fiscal year that has already started, 2027 fiscal year, revenue will be in a range of $23.28 billion to $23.51 billion. The low end of that range is right around the average of street estimates. Average operating income for the full year, $8.06 to $8.15 billion. That's below the average of street estimates, which were tracking closer to $10 billion. EPS, the range is 22.8 to 23.12. The street, that's well below what the street was looking for. They were looking for about $27 a share.
And shares taking a hit in the after hours now as a result, down about 11%. Remember, this is the company buying TurboTax, Credit Karma, QuickBooks, MailChimp, Intuit, Enterprise Suite, and more. I mean, this is a company down 46%, Emily, since this year. I mean, it's a consequence of the so-called SaaS apocalypse, at least as of now.
Yeah, it's been tough for those software names. I do want to get back to the regular trading session, though, before we get back to earnings. Just taking a look at kind of how sectors fared out. It was mostly green when you look at the IMAP and the S&P 500. Information tech, communication services, materials, those were the leaders in terms of the S&P 500 groups. What was lower? Energy, we know that. Oil down about 5%. So those energy stocks getting dragged down. Staples and industrials also lower.
Okay, we're waiting on a few more earnings, including Zoom and Box. We'll bring those to you as we do get them. In the meantime, do you want to take a look at some stocks that were higher today? In the S&P 500, the best performer was Moderna, up 14%. This after last week's rally. Shares cruising higher this year, but still down just about 60% from those 2021 highs, all-time highs in the COVID world. Shares actually moved higher today as a result of what happened last week. Wolf Research out with a note upgrading the company to peer perform from underperform, citing the success of its melanoma vaccine trial. Analyst Alexandria Hammond saying the positive trial results de-risk the platform for Moderna. Shares of Moderna up, the best performer in the S&P, 14% today. Also, taking a look at shares of Nvidia ahead of that report tomorrow. Nvidia shares higher this year by about 14%, so outperforming the S&P 500, up 2.2% today. This is the biggest increase or excuse me, this is an increase based on today's move, up more than 2%. The big question tomorrow: what is the state of the AI industry? Yes, there's other ways we can look, but Nvidia is still the big player. What are the company's efforts to remain at the center of the AI frenzy? And finally, one of the most actively traded stocks today, Resolve AI. It's a company with a market cap just shy of about $2 billion. Shares were up more than 21% today. We can go ahead and round that up. The company did say Google has selected its proprietary distributed database technology for deployment at the infrastructure level within Google Cloud. It marks the platform's first major commercial deployment. Investors cheering that news. Shares up close to 22% today.
Well, there were a few names in the red as we closed out. Following that closing bell, I'm taking a look at shares of Dick's Sporting Goods. A brutal day for this company. Shares of the company down about 31% on the day. That's the worst day ever for Dick's Sporting Goods and its lowest level since 2023. This all comes after the Foot Locker chain that it acquired last year, showing that it's continuing to struggle and really raising broader doubts about the sneaker market, the sneaker industry. The company is saying that the footwear market has become increasingly promotional last quarter. That's after brands upped discounting on their own websites. And the company is seeing a shift to brands like Uggs and Birkenstock. If you take a look at shares of Nike, also falling down about 3% after the closing bell. And we know Nike is a supplier to both Dick's Sporting Goods and Foot Locker. So certainly seeing some investors shifting out of that name.
When was the last time you were in a Foot Locker, Norah, Mulinda?
I was just talking about this earlier with Tim. I can't remember the last time I was in a Foot Locker or the last time I was in Dick's Sporting Goods.
Wow. Yeah.
I tend to be
well,
online.
Dick's not huge in New York.
Yeah, well, Dick's is big. And the thing is, like, we talk about this idea of a company, when they made this announcement back in early 2025, May of 2025, it was pretty widely derided. I mean, Dick's was growing. It was growing 4, 5, 6% on a comp sales basis. Foot Locker was shrinking. It had a negative sign in front of its comp sales number. And everybody said, why would you buy this company? And now here we are more than a year later. And, well, those questions are still being asked. I mean, we had Anthony Giacomo on from Loop Capital, who, I mean, he was pretty blunt, Emily. He basically said, I don't know what the heck they're doing.
Yeah,
and I'm cleaning it up, family friendly.
And you have to remember too, like how much of this is also just due to that weakening consumer. We do have some earnings though, Romaine.
Yeah,
we have to get to.
Let's zoom in on Zoom Communications in the most recent quarter. It does look like most of the metrics did come in either in line with estimates or slightly above. For the second quarter, revenue of about $1.28 billion. The street was looking for about 1.27, so a slight beat there. Similar story on the adjusted EPS basis. But let's go straight to the guidance for the full year. For the full year, the company says that for the full year revenue, look for 5.09 to 5.10. So basically $5.10 billion. Its previous guidance was for roughly about 5.09, so slightly raising that just a bit. Similar story on the operating income side. It had given a range of 2.07 to 2.08. The previous estimate was for 2.07, so the top end of that range coming in slightly above that. Most of the numbers pretty much track in that same vein here, basically either just above street estimates by a few bucks or so, or maybe just right in line. The shares lower by 4%.
All right, you're watching Zoom. I'm watching what's happening with Box in the after hours. The shares for Box, the content management platform, down about 8% in the after hours. Taking a look at the company's latest report, the outlook, the company's seeing fiscal year adjusted earnings per share about $1.54. They saw about $1.56. The estimate was for $1.58. So that coming in light, shares down about 6.4%. In addition to that, the company sees fiscal year revenue coming in at $1.29 or $1.29 billion. Saw $1.28 billion. The estimate was $1.28 billion. So as far as the outlook goes, a beat on the top line, but a miss on the bottom line. The company sees third quarter adjusted EPS about 39 cents. The estimate was for 39 cents. Second quarter revenue coming in above estimates at $321.1 million. The company sees Q3 GAAP EPS at 12 cents. That matches expectations. Shares down about 4.6%, 4.5% in the after hours.
Let's get some questions too. I mean, you look at Box and Zoom and Intuit, obviously three different companies, but to a certain extent, kind of all dealing with some of the same issues with AI and some of the new tools that are out there that to a certain extent chip away at some of the moat that they might have had. And, I don't know how far this goes. I mean, we had a great analyst on from Goldman yesterday, Gabriela Borges, who kind of talked about this idea that the SaaS apocalypse is overdone. done, and that some of this AI build-out will actually end up benefiting them as it will actually increase usage on some of their platforms.
We've had some folks talk to us about that as well, but we're not seeing that play out in the public markets yet. And look, every company is different too.
Yeah,
right?
and don't forget, we get, everyone's talking about Nvidia tomorrow. We get Salesforce tomorrow as well.
Yeah.
I'm sure they'll get overshadowed, but definitely an interesting read on that side of the trade.
All right, Salesforce shares, at least this year, have still taken a pretty big hit, down about 22%.
You're a Slack guy, aren't you?
No, it depends. It depends on. Yeah, I have slacked before. How's that?
Okay.
But I'm all about the Bloomberg terminal. And
he's an IB guy.
Bloomberg. Come on.
Tom Secunda things.
What's a Slack?
Yeah.
All right.